Eric Muadid, Muadid.com, with U.S. market analysis for the weekend of February 20th and February 21st, 2016. Let's take a look at the markets here at the end of Friday's session. We can see that the Dow was slightly down, Nasdaq slightly up, gold was down about 3%, and we see that the VIX was down about 4%. Let's take a look at the charts. If we take a look at the Nasdaq, it was up about 3.8% for the week, and we can see that the previous lows of late 2014 on a weekly closing basis continue to hold. So if we draw a line from there, we can see that the market held. The level that we were watching there was 4258.44. So we've held once before, which was during this test of August of last year, and then also this year we tried to close below that level, but we did not. So the market is holding very well, and we can see that across the globe the weekly charts are showing the most promise for a market that might potentially be looking to move higher, or maybe not. But we can also see here that we still struggle to hold above or stay above a sharply declining 10-week moving average. Ever since the beginning of 2016, the market's been struggling to hold the 10-week moving average or the 8-week moving average, whichever you're using. It looks like around here we still have a lot of work to do to repair some of these charts. If you take a look at the daily chart for the Nasdaq, you can see that on a day-to-day basis, after making this slight lower low in price here, we saw an improvement in the daily RSI. In fact, you can actually draw this line going back to the August lows like that. So we made lower lows here and here, but throughout that period the RSI kept making improvement on its daily RSI lows, and since then we've seen a nice reaction or trade to the upside. And I think now we are walking into resistance. This resistance can be pretty much seen across all markets in the globe, and you can see that if you take the back test, so there was a break here beginning of 2016, extend that same line, and you see that it comes in contact to exactly where the market has struggling at the highs of this week. Resistance here late to early February, or late January and early February, and we are looking at resistance potentially on this backtest line. So there's a level of resistance there that I think the market is already responding to. If we take a look at the break line coming into December, RSI broke down slightly here, which brought the market off these highs, and so we draw a line from there, which happens to be around the 50 RSI level, and every time we hit that line with resistance, uniform activity rejection there, and so we are coming back to test that area. And I think around here the daily charts are pointing to markets that more and more look like they actually do want to go down. If we take a look at the Nasdaq on the hourly chart, here I'm using RSI period of 26. You'll see that at the highs of the last couple of weeks, we can see coming into December, that was the high. It hit that red line. We hit that red line also here towards late December, and now we are coming back. We've hit that line and already pulling back. So net one can assume that the market has already given us a short-term sell signal as far as the Nasdaq is concerned. And by the way, I say a sell signal because if you take a look at this resistance on this level here, we know that the market did drop for a couple of days there. Again, resistance here, and the market would go on to drop over a period of weeks, and now we are coming to show resistance here. As long as we are staying below that red line, this could suggest that there could be a couple of days, couple of weeks to the downside. And again, all this is depending on whether the market can hold below the line, which is bearish, or break out above the red line, which would be a change in behavior, and that would be bullish. If we take a look at the Dow weekly, and we can see again here we made a slight lower low on a weekly closing basis for 2016. While that was taking place, we made a slight improvement on the RSI. That was very bullish. Net we can see that that is probably a good technical reason why the market bounced this past week. And actually we can even go a little bit farther out. We can see off the lows here and the lows there, draw a straight line. They connect nicely with the weekly closing lows here, here, and here. So while we made lower lows in price on a weekly closing basis, we saw an improvement on the weekly RSI. And again, this setup by itself is one we should actually be very respectful of, because if the market can continue, and eventually if the market can move above the 10-week moving average, the 8-week moving average, if it can move above this moving average, then we can start seeing that maybe this market actually has legs based on this weekly chart support. If you go back about 5 years, and this is something we've been discussing the last couple of weeks, the possibility that the market is actually doing its best to build and move higher is going back to these lows of 2011. Let me just draw that a little different, a little lower. So somewhere around there, that's perfect. You can see once we moved above this level here, the market has traded very well. Since 2011, we touched that same line here in 2012. We touched the same line with uniform action. 2012 again, we came close there off the lows of 2014, late 2014, and then here we moved back above the green line for this nice entry for a swing trade for about a couple of weeks there to the upside, and now we look like we are showing nice double bottom support here. So week to week, actually this is very encouraging. So as long as the market is bouncing on this green line, we have to respect that if the market can clear the daily resistance and the hourly resistance, if the market can clear those short-term resistance, then we get here a good reason why we should actually be playing the market to the upside. The only problem is if you take a look at the daily, the market is coming and struggling to break through recent resistance lines, as I'll show you here in a minute. If you take a look at the break coming into December, so just like the Nasdaq, we broke through here. At least that's how I draw it anyway. And the reason why is once we broke through here, this was right there. We haven't been back to those levels. So we are using the market itself to tell us how to look at the chart. That red line, which also happens to be around the 50 RSI level, has become a problem. We hit that with uniform action, just like we did for the Nasdaq. We stalled, uniform action rejection there, and we stalled since then. We've been down substantially, right? And then we are coming back here. So until the market can clear that resistance, we have to assume that as long as there's resistance on that red line, that the next swing trade is down. And again, if the market can clear that red line, given the fact that the weekly charts are very strong, then maybe that the fact that it clears the red line, when it clears the red line, would be indication of a market that is ready to bounce to the upside. So right now we have to play this, in my opinion, from a point of view that the market pulls back. Also, there's another line, this line here, which is now backtest failure ever since the break here. We can see here double top resistance for the highs there, and now we are here. So again, the market does need to clear that blue line by moving above that. So for now, we have to play this thinking that the market is gonna stall. But if it breaks out, well, now we have to look at that as a possibility of a market that could actually have some more upside. If we take a look at the Dow, 6 months worth of RSI hourly data, so 6 months hourly, and here we are using RSI period of 26. Just in case it looks a little bit different from yours, this is the reason why. We go back to the highs there, which was in November. So this, over the last couple of months, that's the high, and we can see that this was corresponding to this break. There's a trend line break there, brought the market off those highs there, and we can draw a line from there like that. And without adding too much, we can see that it was resistance here for the highs right there. We came and tagged that late December for the highs there, and now we've, even here we came close enough for the highs there, and now we've already hit that red line and are coiling back. So I think if you take a look at this, in my opinion, more than likely the way I look at this is we've already seen the resistance, just like we had seen in the other resistance levels here, here, and here. And we have to assume that the next swing trade based on hourly charts is down, until and if the market can clear that red line. Since we haven't cleared the red line, we have to assume that we are looking at a market that is setting up net to be ready for another leg of some type of a pullback. If we take a look at the Dow Transports, we can see after a nice move off these lows here, nice 1, 2, 3, 4, 5 weeks to the upside, great move. Now there's a question of whether there's more upside. And what I see here is if I take the highs here and draw a straight line on the weekly RSI, we can see that the market has come back as close to testing this resistance line as it can. So if we start stalling around here, that would be consistent with what we are looking at on the daily. Also, there's a short-term break level, so somewhere around there. If we draw a line from there, we should look like that. You can see that we are coming back again to test this line, and that could be a problem. But I want to take a look at a 5-year weekly, because the 5-year weekly, just like for the Dow, there is some interpretation that this market is not as bearish as it might seem. If you pull back and look at it from a long-term picture, there was a nice entry here, so off this level here in 2011, somewhere around there, and I'll draw it just below that, so right there. You can see that we've been bouncing over the last couple of years on this line. Anybody who was using this method would have seen these lows. Even here we came close enough for the lows there, and now even this band of support held the market during this period. So we are back above that green line. The more we stay above the green line, the more the market looks good. But I also think that, and I've seen this in other markets across the globe, that they are coming back to test that band of support. Problem is, if the market coils back down below the green line, let's say if we have a next couple of weeks, if they are down, then this is going to be rejection at the green line, which is actually bearish. So depending on whether the market can build and continue showing support, or if this green line is now going to become resistance. So that's pretty much one of the problems there. Take a look at a long-term monthly chart for the Nasdaq, for the Dow Transports, excuse me, and we draw a line right there. This line on the monthly, long-term monthly chart going back to 1990 is a major reason here to actually start suspecting that the market is not as bad as it seems. If you take a look here, every time, and this line so happens to be at 38.2 on the monthly, if this is all you use to time your entry back into a market, it makes a lot of sense. Could have been very successful over the last couple of years. In fact, going back the last 26 years. Support with uniform action here in 1990, support here in 95 lows. Here it held for the lows there and you moved higher for a couple of months. It held again here, you moved higher for a couple of months. Double bottom support here for the lows of the .com bubble bust. And of course, we know that the market went on a major run. We came here in 2008, 2009, uniform action below the green line, back above it. So once you moved back above it, there was an entry there. And of course, the market went on a major bull run, right? And so we came back here, we tagged this in 2011 here, which was a major pullback in the market, and we went again on a major run. So we are coming back here 2016, and we are showing uniform activity support. That's why I'm saying we have to be very careful, because if the market can clear the resistance levels on the daily and on the hourly, if the market clears those short-term resistance levels, we could actually be looking at a market that has an opportunity here to have a major move to the upside. And pretty much that's where we have to make sure we have stops if you are short. Now take a look at the Dow Transports, and you can see here, in fact, what I'm going to do is, because the Dow Transports have been down over the last 1.5 years or so, let's take a look at a 2-year weekly, 2-year daily chart. So 2 years worth of daily data. That's a mouthful. All right, so what we do is we find out what was going on at the highs there in beginning part of 2015, and we can see that there was a break in the RSI. I will draw it actually somewhere there. Since that break in December, and remember we are using this chart to tell us how we should interpret the action. There was a break there. If I draw a line from there, you can see that this has been a problem for the Dow Transports. And every time we hit that line with uniform action on the daily, we make a high. We made a high there and all this. So let me just spend a second showing you all these highs came with uniform activity rejection. If you haven't had this, if you're not aware of this method, this is my original method, so I probably understand it more than most. And we can also see here rejection here for the highs there, double top rejection for those highs, again rejection here in December November period for the highs there, and here again we are showing that we are stalling. So there's one reasoning here that the daily charts are still becoming a problem for markets, and that could be eventually become a problem and the market might not even move beyond current levels. If we draw a line connecting the highs, I would draw it something like that. You can see that still we are struggling to hold above that top side line. In fact, if I draw it a little bit different, let's change colors here, and I draw it from here. Oops, let me attempt that from a different point of view, so bear with me. If I draw it from here, you can see that connecting the highs like that, little adjustment, we are still struggling to move above that line. So I'm currently of the view that this is still an area where the market struggles and could continue to struggle. If we go back, take a look at a 6-month hourly chart, RSI period of 26, and again we can see that if you draw a line right there around current levels there, where it has been seeing short-term highs, rejection there for the highs there, rejection there for those highs, we came close here for the highs there, and now we are already seeing that becoming a problem. So I think hourly charts and daily charts are really a problem across the globe, and so that leads me to think that, you know, net we need to clear that resistance first before we can actually build on market moving higher. We take a look here at the S&P 500, just like the Dow, same analysis, lower lows, improving technicals. In fact, going back 6 months, 7 months or so, lower lows in price on a weekly chart, and with an improvement there. We can also quickly take a look at the 5-year weekly. Again, this is just repeating ourselves, so let's not spend too much time on this. And you can also see here that going back to 2000, and remember this, the best thing you can do for yourself is to be as neutral as possible. And you can see that if you use this green line, which was the entry of this break of the lows, major lows of 2011, this has been a great place to go back in the market after pullbacks. Great place to have been. And remember, over the last couple of years, we've been using this line for re-entry back in the market. Here, the market held back above it for re-entry, and now we are seeing a nice, absolutely powerful double bottom support, as you can see here. Support there on the green line. So the weekly charts have the most promise. Are they going to deliver? Well, depends on whether the SPX can clear recent resistance, and just like the other markets, I'll just go ahead and draw the line where there's resistance. It needs to clear this resistance, number one. It needs to clear also then the other resistance, which is the backtest failure line right here. So those two lines are a problem. So the market needs to clear those before it can start building to the upside. And so just let's take a look at the monthly charts, and irrespective of what's going on, we can see here that at the very least, this market continues to be net on a monthly chart bearish. We can see here it could easily continue breaking to fresh monthly lows. RSI are trading at 3-year lows, and the MACDs are also trading at 3-year lows. So net, if you are to make a mistake, in my opinion, you probably right now would want to make a mistake going short, because the monthly charts continue to be bearish. I think there's no need to show the Dow and the Nasdaq, because they're pretty much all trading with similar looking monthly charts. Alright, I'm just trying to make sure the video is under 20 minutes. I know you guys have to enjoy your weekend. Eric Mwade.com, as always, good luck, peace, and blessing. EACS.